Hello, everyone. An impressive rally overall by stocks today. However, don't get too excited too fast. Let's focus on the NASDAQ really quick. So far, what we have today is technically day one of a rally attempt. I don't look any further into it. I don't look any less into it. It's day one of a rally attempt. And so far, a successful test of these August 24th lows. So far, we're holding the lows. We got day one of a rally attempt. We'll see what happens from here. Looking at this as we've bottomed for sure, or we're definitely going to fail, is a sign of an amateur trader, investor, or just a cocky, confident, pig-headed moron. There is no way anyone can know for a fact what we're going to do here. Seasonally and historically, we've got 2.5 weeks left of terrible historical price action. After that, we can start looking for maybe an October bottom. But overall, right now, day one of a rally attempt, no more, no less. Volume was well above average and higher the day before. That's a good sign. But compare it to the volume on the reversal and the sell-off following the reversal at the 5200-day moving average, even though that was option expiration. And even if you want to compare it then to the breakdown below the recent support levels on 928, it was, just slightly higher, or slightly lower, slightly lower. So once again, no clear indication that what we see today is in fact a bottom. And don't forget all the resistance that we have. We still have these September resistance levels that we're coming to right now. We still have these August, July resistance levels, the 200, the 50-day moving average. So there's a lot of problems short term, so don't get too excited yet. And plus, the death cross is in full effect. NASDAQ 100, same similar situation. We got the death cross there. Finally occurred today. So the 50 and 200-day moving averages are trending lower. That's going to be problematic. They're probably going to run into resistance there. Once again, volume not that convincing on the NASDAQ. New York Stock Exchange, nice volume surge, but overall, day two of a rally attempt basically on this one. Would have need to see a lot more than what I saw today to get me very confident that we have seen the ultimate lows in this NASDAQ, in this New York Stock Exchange. But so far, for now, successful test of the 824 lows, tons of resistance at the 50, just these September resistance levels, and don't forget the July, August, and then the 200-day moving average. Like I said, shouldn't be easy for stocks to just rally straight on higher if we are successfully testing those August 24th lows. S&P 500, same similar situation as the NASDAQ. Dow Jones Industrial Average, same similar situation, as the NASDAQ, same situation as the New York Stock Exchange and S&P 500. And the Dow Jones Transportation Average, looking like the Dow Jones 30 now. It still has a lot of resistance before it can take off. And then the Russell 2000, shit, I shut down all my charts again. I'm only thinking about it now because I really don't care because the market's bad. So it's just like which straw is bigger? Is that straw bigger than the other straw? Who cares? So the Russell 2000, if it is or is not hitting new lows, according to Telechart, it is hitting new lows. You got day one of a rally attempt today. Once again, after 8 straight down sessions, what did I say yesterday in my new positions market analysis? We should be expecting a bounce. Here's your bounce. Not much. Didn't make up for much of the sell-off on 928 and 925 combined for 4%. Let's say today's session on the Russell 2000, we were up 3%, 4%. I'd be stoked. But knowing that the New York Stock Exchange was up 1.85%, while the Russell 2000 was only up 1.55%, and the Dow Jones Industrial Average was up 1.47%. That's not the kind of extreme relative strength I want to see in the Russell 2000 to be convinced that we're going to rally. Now, going on to sells, go figure, it's still screwy out there. So I had a speculative long position TRCH. It's completely failing. Full cut loss signal. Move below 185 was my final sell stop. So when it traded at 184, I was out. But now it is definitely failing. But once again, another nice technical pattern. Not working out. Wasn't anything great. Wasn't anything hot. Wasn't anything amazing. It's just a nice pattern. Didn't work out. Energy stock, they look to be doing good, but clearly not this stock. And then one of our hedges has ever so kindly produced a 50% sell signal, closing below the 20-day moving average and closing at the 50-day moving average. Today's low of day, a move below 58.50. I'll be getting out a half of it, and then we'll see with the rest of it. I think my final sell stop on this position is all the way back down here at 52.07, but move below 58.50, I'll be out a half of SOXS, and that's going to be another churn. A lot of small churning. Not losing any money, not making any money since July. It's been a hard 2.5 months of piddly trading, going nowhere. The idea behind all this piddly trading is that by the end of this chop, whatever we have long or short, and then a trend restarts, we'll be cutting our losses fast on whatever's not working, and then the positions that we have we'll be able to hold on to for some, hopefully, outside average return gains. Nothing's guaranteed, but that's the plan, and that's how it normally works. But I tell you what, it can be tiring. And if I was only using, if I was trading with more capital than I am now, tell you what, I'd be losing a lot of confidence in my quote stock picking. But like I said, I've been around a long time. I've made a lot of mistakes in my personal life. Haven't made those same mistakes in the stock market. Not going to make them now. So I know what we have here. It's still a time to trade small or not trade at all. For me, best know thyself. I cannot just stop trading. I must be piddly with my small trades, take the small losses, take the small gains, and do a lot of work that produces nothing, so that then I can push 5, 10, 20% of my account capital into new long positions when we do get a good fall through day. Bulls and bears remain crossed on investors' intelligence, so anything is possible. Now, with that being said, there's a couple shaky shakes that I need to keep my eye on. EPAM, damn it, I made a big mistake. Not big mistake, but it moved below the 50-day moving average on lower volume, and I decided to go ahead and move my final sell stop below 69.58. And yesterday it looked like a wise choice, even though it was closing slightly higher, but was rolling over. But today, now I feel like a damn fool. Where my final sell stop was before was here, obviously, and then as we, not there, because it got shaken out, it's got totally shaken out, so I rebought here. Made my final sell stop below 68.57. Had I kept it at 68.57, I never would have been shaken out of EPAM. However, I decided to get cute and move my final sell stop from 68.57 to below the 50-day moving average violations low day 69.58. That is not being cute has now prevented me a shakeout. So EPAM's retained the 50-day moving average. So what I'm going to do, I want to buy back what I've been stopped out on, which is, I don't know, what is that, 0.5 or 1%? I think it's 1% of the position. So I'm going to set some buy stops, a move above 75.83. I will be back long EPAM using a far wide cut loss level, 68.99 as my final sell stop. But I need to buy back EPAM if it breaks out. So I'll be setting buy stops on there. And then ABMD got shaken out of it yesterday. Nothing I can do. I had to. I mean, who would have known? And now it's trying to bounce back, so we'll see if it can retake the 50-day moving average. I'll be looking to do buy stops on this one also, and it will more than likely be above the 107.88 move, but we'll see. It could be lower. But EPAM definitely want to get back long if it moves below above 75.83. More than likely in this market, it'll trigger. I'll get shaken out when it closes back below 68.99. That's why I keep trades small. And that's why tonight's new long position is also small, but we don't risk much, so we can increase them. BFIN, 2% of the account capital. Cancelim quality stock, confirmed in the price volume BOP scan. And actually, now that I think about it, might want to just do 1.5. 1% for being Cancelim, 0.5% for being confirmed price volume BOP. So 1.5, if we're wrong in the position, the most we risk is 3% with a move below 11.95. I'll take those odds any day. And then the other new long position, BCO. You can have your first sell stop below either 26.62 or 26.28, and then your final sell stop below 25.80. Once again, on the entire position, we don't risk more than 5%, so it's a good one to go. 1% for being Cancelim, 0.5% for being price volume BOP. So remember, first half 26.28 for me, last half 25.80. BFIN, first half is going to be 12.10. Final amount is, for me, is going to probably be 11.91. And then we also have an add signal in BNCN, even though it's not closing above where it opened. This is a very beautiful longer term chart with clear cut loss levels below 21.90 and then 21.85. That's an add signal, 0.5% from being canned slim, 0.25% from being confirmed in price volume bought for a 0.75% position.